Hello, or Kimcho, and welcome. My name is Brandon Wendell, and I am going to go ahead and take a look at the Nifty index and do some analysis on that, as well as the Bank Nifty. We'll go ahead and start off on the weekly chart here of the Nifty. As you can see, we've come down into a weekly demand zone. Sorry about the vibration there on my phone. Anyway, the price went all the way to the bottom of that range for that zone. You see, it was basically just the one candle. The green candle is actually part of the leg out. But since we penetrated so deeply into the zone, I'm not sure we're going to get a really strong bounce out of this. We'll have to watch for that. We could continue to just do a small bounce before we continue lower to the 15,899.80 area. That's the next area of demand, as you can see on the chart. So dropping down to the daily time frame. Actually, before I do that, I can go ahead and throw in a Fibonacci retracement because, again, that's what we would be measuring, the retracement of the overall impulse to the downside that we just had. And almost could measure it from this move down, honestly, because that's the uninterrupted move. This is not just one single impulse. Really, it's 1, 2, 3, 4, 5, which, if you follow Elliott wave count, would mean that we're due for an ABC correction right now. So if we do that, we actually go, which we should, on this move right here, we go down to the daily time frame, and that's where we're going to see some of the retracement values coming in. Looking back at that same area of demand on the daily, well, it was supposed to be a little bit higher and broke. So that weekly demand, I don't think it's going to hold again on another test, unfortunately. So the small bounce that we're expecting right now, again, we've already moved up just a little bit. We can go up to 23.6 or higher. As far as any supply, let's see, where's the close on this candle? Yes, 221.40, and the low here is 225. So that's just below. So that's drop, one candle base, and then a drop for the zone. So all the way up at the 76% retracement, we actually have a supply zone. So on the daily, I don't imagine we're going to go that high, honestly, because of the weakness in the overall market. We may just go back to some of these breakout points, maybe the 38% retracement, which kind of lines up with the breakout of this previous low. So keep an eye out for that. On the daily chart, plenty of bearish momentum. The weekly didn't have the bearish momentum. It stayed above 60. I can go back and show you just real quick. So that's a positive, but the overall trend is getting very, very strong to the downside. You see, we're just losing momentum completely. So dropping into the 4-hour time frame, now we see lots of weakness. This has been a very bearish market for quite some time. You can see none of these peaks have taken us above 60 since way back here in October. So each one of these lower highs under 60 is showing more and more bearishness, and the momentum is gaining. So that's why I don't think we're going to see a big bounce out of this. Looks like the supply zone on the 4 hours about the same area. Well, let's see, drop, yep, base, 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 and drop. So really nothing much has changed on this time frame. We're still looking at about maybe a 50% retracement. And that's because we do happen to have a little zone right here, 994, 992, yep. So that's drop, base, and drop. So we could retrace about 50% of that weekly move down, and that puts us in the supply zone of 16,966 to 17,107, with the target really being 17,000, right? At about 17,014 is approximately 50% retracement. This would be a little more optimistic if we can get up to the 184 area, but I don't see it, honestly. Dropping into a 60-minute time frame as we try to fine-tune the entries and where the turning belts might be, we actually see that the zone gets a little more narrowed here, and it's just underneath 17,000 that we might run into some selling pressure. The whole number, 17,000, obviously is going to be psychological and probably offer some sort of a barrier, as well, as people are going to try to push it just above 17,000, maybe again to 17,014 before we see the sell-off and snapping a lot of people's stop losses as they try to buy the breakout of 17,000. So be careful, don't get caught in that. And even now, as we're moving, if I readjust for the current impulse down, you can see that, well, we haven't respected anything yet as far as Fibonacci retracement, so not likely to either. Right here, we've done a 50% of retracement that we've had of the price action since the gap down. That doesn't really mean anything, though. This is really where the impulse began. The gap is just part of the move. And if we really want to get technical with it, I would say that's probably the best place to begin. You see the sideways motion, the most recent impulse down began right from that high, And wouldn't you know, we've just stalled out at 23.6% retracement there on the Nifty. So this is going to be a very weak pullback, but that might be it. And you can see how far down below 40 we are. We're seeing nothing but lots of selling pressure going on. If there's a 15-minute supply zone here, I wouldn't be surprised to see it turn. If not, again, I would say that we move up to the 16,966 area. So either we turn around now, which we only have one red candle. There's no reason to panic yet. But if we do turn around here, we could have a pretty severe move back down, and I'll give you some targets on the way down there as well. Additionally, like I said, there is the supply zone. You can see it on the 15-minute chart a little wider here, just right around that 17,000. That's a pretty good target if prices continue to rally up a little bit higher than where we are currently. So if we turn around now, where are we going to continue? And by the way, there is a 15-minute, hesitate to call that a zone. I really don't. This is the only zone we have right now, just around 17,000. So going back up to the 60-minute time frame, what I could also do is put in a Fib extension or projection to give us an idea of where we might be pausing, and maybe we want to take some profits along the way. So if we do impulse down, and if this is the end of our move, then we have our first target at 16,085, and we run into that higher time frame demand zone that I had mentioned earlier. And inside of that, there's also 15,746. Now, if we are to retrace deeper, all the way back up to this supply zone, which I said is a high probability, right around the 966 area. Doesn't have to be exact, but there we go. You can see that our retests of the current lows would be real easy to do. Then our next target would be 16,077. And then the third, again, right into that demand zone at 15,900 or 15,836 is where actually the Fibonacci level is. If I look back just to see if there's any kind of a demand in the way that might hold us up, not seeing anything yet. We got to go back a little bit in time. And there's nothing of huge significance. We do have a little bit of a rally-based rally right there. Even this drop-based rally might give us something of a push back up. It's not a very strong move. This is definitely more powerful with the large candle and the gap up at the 16,048. So let's see if that lines up. Pretty close to the Fib retracement here. This one's in the middle of nowhere, but I said it's also not very strong either. I would look for, if you're shorting at the 17,000 or even at this level where we are currently looking to turn around, I would actually target the 16,077. So 16,100 really is what I'd look at for a potential target. Moving over to the Bank Nifty. Oops, spelled that wrong. Bank Nifty. Or Nifty Bank. There we are. Again, I'll start off in the bigger picture here. We'll go out to the weekly chart and then work our way down. So a big drop in price, and we are dangerously close to breaking into bearish territory on the momentum. I think it's going to happen. There's nothing here to hold us up. So with the Bank Nifty, I would expect that to continue to push down. And really, there's no demand on the weekly chart until here. That's pretty scary. Everything else, it's kind of weak. We do have, I suppose, rally base. Nope, that closes below. So this doesn't work out too well. The only level we have is 24,809 on the weekly. Now, are we going to pull back that much? It could, easily. We're currently retracing this move up, and we've retraced more than 61% or 68%. Yeah, I thought so. So we're heading down quite a bit, and it looks as though, the real reason we're turning around is we just lost momentum. That back and remove. You can see that when prices moved up to this major high, it did so without momentum. And what I mean is you take a look at the momentum indicator down at the bottom, the RSI, and you just see that we should have more momentum, especially when we're making great highs like that. And instead, we have less momentum. So that is a bearish sign for the market and led us to this downward move that we're currently experiencing. Not to mention, after it did do that on the weekly chart, we tried to rally. And this week, we confirmed this is a peak. Okay? And the reason why we confirmed it was a peak is because price put in a high, and there are lower highs and lower lows on either side because we gapped down and moved down. That's bad because that confirms a trend reversal. When you get a negative divergence like that, followed by a peak that fails to get back into bullish territory above 60, that's usually your signal that the trend's reversing. So that's what we're seeing here on the weekly chart, and there's no real demand on the weekly until 25,000. So dropping down to the daily time frame, there'll be opportunities along the way, I'm sure, but we have a slight rally base drop. This would be your supply zone that we're currently playing around with, and we have to look back to see where's our demand. So I'll put in a horizontal line, work back, and I don't have anything here. There's nothing here that qualifies as a good demand zone, so we'll keep going back and delete this out of the way. There we go. You can see everything's been tested for the most part. This was originally your demand here. You have that leg-in candle, 2 basing candles, and then your rally, but obviously tested. We test the third time? No. We could go to the untested portion because we barely went into the zone. And usually when that happens, when you go less than halfway into the zone, there still might be a lot of buying pressure left underneath that. So we're looking at about 30,405 to 29,687 as a possible bouncing point. But other than that, nothing. Until, yeah, we just keep going. Let's see, what's the close on this? 771, and we have the high here. Nope, that's above. So really, we just go all the way down to the 24,809 again on the daily. So we may experience a bit of a bounce, as I mentioned here, at 30,700. But overall, we're extremely bearish, and I would be looking for shorting opportunities on the way down. Go down to the 240-minute chart. Nothing changes. Still seeing lots of bearish momentum. The only thing that does change is now we've got a supply zone a little bit lower in front of that daily zone. So we're looking at 36,385, 36,735. And we are currently starting to retrace our impulse down that you can see right here. And if that's the case, throwing in some retracements, you would see the same move pretty much on the daily as well. We'll look to see if there's any zones that line up because we're probably not going to get all the way back up here. We could. There's always that possibility. And if we do, let's see, we'll go ahead and fix this so the numbers aren't on top of each other. There we go. So we've got about 36,385, 36,436. So right in that area, 36,300 to 400. And if we could get up there, this Fibonacci retracement of 78.6, very deep retracement. I just don't see us getting that much bullish activity pushing us higher. Instead, let's drop down to the 60-minute time frame, and there we see some other zones that are more likely. We have something at the 68% retracement, as well as just below that as well, we have drop base drop pretty much right above the 50%. So we're looking at 35,586, 35,556. Those are the two numbers there. It's kind of hard to see because they're overlapping a little bit, but it's 35,586 and 35,556 on the zone here. Let's see. There you can get the numbers. Nope, doesn't show up that well. Anyway, that's where it looks like we might be pulling back to. And if we don't get that high for whatever reason, we go down to the 15-minute chart. We may stall out pretty close to where we are right now. It's not a great zone, though, so I'm really not wanting to put lines there. But there is a bit of a drop after a basing right around 34,605. But it does look like we should be able to push it a little higher here. Again, we're just retracing some of the bigger time frame impulses to the downside. So if we do, let's go back to the 4-hour and get some probable turning points. We already know the big demand zone down here, but we can kind of confirm some of that if we retrace back to some of those retracement, supply zones. If we use Fibonacci extensions on the impulse down that we're currently experiencing, and we pull back, it doesn't really line up with anything, but there may be some targets along the way. If we retrace a little deeper to this zone, again, it doesn't really line up anywhere, but we get some other pausing points along the way. Those are areas where you might get a little bounce in price. And it's improbable, but if we do move all the way back up to this 36,385 area, now you see we go retest the prior lows, and then we have other targets, including the already tested zone. But we're likely to see some selling pressure coming in at one of these levels, especially this 580 area, 35 580 is where I'm really looking at for the possible turn to the downside. In the meantime, if you see any kind of demand zones that you want to buy on the way up, that's a counter trend trade, which offers you a little bit of extra reward, but also increases your risk quite a bit. So maybe something you want to stay away from and just focus on looking to renew some shorting opportunities as we're simply getting a small bounce off the larger time frame demand zones before we continue impulses downwards. So that's kind of what I'm seeing on both the Nifty and the Bank Nifty. Not a whole lot of bullishness here, just a lot of bearish opportunities still coming into the markets. Again, this is where I would put that retracement again. Just verify, yeah, that's the 50% retracement. That's where I'm looking at prices pushing up to before they turn back down and head down ultimately to the 30,700 before another meaningful bounce. So until next time, everyone, trade safe, trade well. Make sure you click on the subscribe button. That way you can make sure you follow me and get alerts if you like, and also like the video, hopefully, if you did enjoy it, and that helps me out. I'll talk to you next week.